Good morning, trading world. It is June 13th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. I know it's been a while, but back to spill my thoughts on the upcoming few days in the market. Everyone knows we have the FOMC announcement coming Wednesday. The important thing to realize is that the market is baking in an 80% probability that the Fed will pause on rate hikes and just a 20% probability of a 25% basis point raise. Just in case you didn't know, this is where I'm getting that information. The CME Group Fed Watch tool. To me, it seems we have an impending pullback regardless, it's just the order of things that is the mystery. If we get a pause, we are free to continue up a bit more before pulling back after the announcement, but still closing higher than we started the week. If we get any kind of increase, we could see a rupture that takes us back down toward the 414 to 410 area really quick. Behind all of this, we need to pay attention to how flimsy the market is. I haven't agreed with Jim Cramer much lately, but he had a valid point recently about what's driving the market. It started off on a bunch of short squeeze candidates breaking out. By the way, go back and look at the pre-market on 4/24/23 when I said get your short squeeze candidates ready to buy. At that point, or actually on the 22nd, I bought Carvana. But back to present day. Right now, I see Oracle, Adobe, AMD, Tesla, Intel, and Nvidia in the driver's seat. These will also be the first to be hit when stalwarts like Apple and Microsoft start to crack and give way. There may be a couple of months left at these levels, but it's not going to be easy because the cracks are going to be huge tremors felt across the market, dropping rapidly and grinding back up. Today, if the CPI doesn't interrupt this run up, maybe the Fed will with a small rate hike. If not, 443, 450 on the SPY, here we come. I'm going to go through the outlook for the weekly since I didn't post a pre-market at the beginning of the week like I normally do, outlining the outlook for the entire week. The weekly outlook is bullish, closing above the 429.9 with a possible retracement of just below 429 area at some point this week. We have dissonance between the tech side, which is bearish, and the quant side, which is bullish. This brings us to the key levels for the day. Alright, here we are back with the key levels of the day. Starting on the resistance side, we've already cracked through our jack resistance at 435. Our queen resistance area is going to be 436 to the 437 area, and king resistance for today is going to be 438 to the 439 area. On the support side, our jack support is going to be the 433 area, queen support 432 to the 431 area, and then king support 430 to the 428 area. The main thesis for today is bearish, closing below the 433.80 with a projected target low of between 433 and 430. The alternate thesis is bullish, closing above the 433.80 with a projected target high of between 434 and 436. Maybe just a bit more than that, 437 to the 438 area. The main channel we are in is between 425 and 453. Yesterday, market strengthened breadth, opened gap up, and immediately dropped to fill the gap, and then created higher highs and higher lows the rest of the day, pushing price action almost straight up at times. I expect strength to open strong and at some point beginning to level out ahead of the pullback coming through the middle of the week due to the FOMC announcement. We have harmony between the technical side, which is bearish, and the quant side, which is also bearish. But we also have a monthly time frame that is in control and rising. So regardless of how big this pullback may happen to be, we get a bounce back from it. The futures have a bearish bias for the day, with harmony between the technical side, which is bearish, and the quant side, which is also bearish. Let me go back and clear this pullback issue up. There is a way that we don't get the bounce back, and that's barring the Fed does something unforeseen, like raising the rates 50 basis points. Again, that's the only way we don't get this bounce back. I'm going to run through the scenarios real quick, but I don't really have time to draw it. Running very late this morning. Our most probable scenario is going to be our rounded reversal day type structure. We can get a continued push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance before going back down with the same energy or force we went up with the first part of the day. That has a 36% probability. The next highest probable day structure is a trend day up. We open gap up, start with a push back toward the previous close. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible Queen or King resistance area. The key to watch today is for a big risk of a failed trend day where we push down from a target. That target is going to be that 436, 437 area, because that is the weekly market maker's expected move for the week. Our last scenario is going to be the expanded range day structure. We could get a pop pre-market or early in the session into rejection from resistance, experience some consolidation as we try to get it together for another push up, but end up making a half-hearted push back down that resets and restarts in the next session. Those are the scenarios of the day. You must be very, very, very careful right now. Because we could be on the verge. Well, if it isn't enough, we are in a breakout. And when we get to these levels with an event like the FOMC, this could snap us and we could do something very unreasonable, which is possibly run all the way to the 443, 450 area in a matter of days. So you want to be very, very careful with your positions. As always, excuse me, as always, please be aware of the risk that you take in your positions and in market conditions. We must always take risk into consideration, and then we manage that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's get out and make it a great one.